We got a quick little shift in the short-term trend here, and so I've taken a stab at a long, looking for a revisit of this recent peak, and then I want to take a partial at the 15-minute buy-side liquidity at 720. I'll take out one more there. And if this trade works out, then I'll let the last contract just run, because why not? We've made so much today, and typically you should leave something to run at all times, right? Because you never know what can happen. One contract has made me several times over $500-600 extra, so that's a big deal, having that extra boost from just one contract. And it's not just about making more money on the runner. It's also more so about avoiding over trading, because if you're still holding something, if you're still holding one contract, you're not re-entering new setups, getting in, getting out, adding, removing, doing all of that over management, which usually does not result in a good result, a good outcome, right? So you want to not over manage your trades or take too many. So let's see what happens here. Getting a little bit of volatility. It is at this time 3 p.m. Eastern, 10 p.m. where I am now. You see that here, real time. Previous short I took, I was looking for intraday demand to come back at the low of day. Market had other plans. So maybe this one might run to the upside. If that's what the market chooses to do and shift into an uptrend, we shall see. It could also get stopped out. What it does at this point does not matter to me. I've decided to take a trade. I have a plan. I've got a reason for getting in. Either it works or it doesn't. So I guess we're going to find out soon. What makes sense to me more at this point is to secure 3. End of the day, if it works out, that's amazing. It's another $1,000 across 5 accounts. So I'm going to cut 3 there, and the last contract I'll just hold it. If the trade works out, could of course fail. Guess we'll find out soon. Should adjust my stop to this correct point here. Gotta love it when the market just bobbles around up and down while you're in a position. But that's what the market does. That's the nature of the market. To expect to have, instant rocket moves in your favor all the time would be delusional. And so, rather embrace it. Right? So adjust your expectations. That way, when you're in a trade, you don't really mind so much what it's doing, because you've adjusted your expectations. You expect the market to bobble around like this. You've got a target, you've got to stop, you stick to the plan. What happens, happens. Everything in between is noise. It's distraction. It's irrelevant. It doesn't matter. Alright, so let's see what happens here. 24,700 or 24,636.75. We shall see. Short-term trend has shifted long. Of course, on a day like today, I don't expect trends to have much continuation. Of course, this morning was the exception to the rule for these kind of FOMC type days. We had tremendous range and follow through. Not something that usually happens. Not typical of FOMC days. But this kind of price action that we've had the last hour and a half, just chopping sideways, that's usually what you get. And that's why I skipped the morning session. But when I saw that we had range, we had volume, volatility, I decided, okay, well, let's put on a few trades, and I got some tremendous shorts for a few hundred points in my favor. But now, I'm seeing more the typical nature of FOMC type days the last couple of hours. But nonetheless, my strategy BC8 is telling me that the short-term trend has shifted long, so I've taken a trade, defined stop. it works or it doesn't. So at this point, what I'm going to do is I'm going to raise my stop here so that I cannot lose anything. And what happens, happens. Okay, now I'm going to hold this one contract. Now, because it's one contract, I'm going to give this one a little more room. Okay, risking 24 bucks on the last contract, no big deal. We've got buy side liquidity sitting at 720, if I'm not mistaken, from the 15. Yeah, 721. So that could arrive, but I'm going to hold this last contract. And I'm going to hold it for 780. Okay, so 785 technically, but I'm going to be grateful if we go to 780. I'll close it out there. Otherwise, $20 loss on the last contract. And let's see what happens. Great trade. BC8 strategy for the win. I'm going to adjust that last contract to 768, 15-minute gap that I see. Not much of a difference. Either hits or it doesn't. And I'm wrapping it up for the day here. Solid session. So we've run into the 15-minute buy-side liquidity and definitely could have some turbulence here, but I've got confidence in this 15-minute gap here closing. 15 minutes and 30-minute, 60-minute, when you see these gaps and they're nearby, they do like to close. Now, when it comes to gaps, don't think that they have to close. Just because they exist, they don't have to close. They could close on the next day. The only reason I'm paying any attention to it is it's a last contract that's running. And in my last contract, I like to look for a destination, whether that's a liquidity level, so pivot high, pivot low, or some sort of a gap. I'll aim for that, right? So that's the only reason. My trade will not be engaged and originate from the existence of a gap. It's not going to happen, right? But I will use them as targets. So it's looking great. This was quite the trade. Let's get that 768. And here it is. Great. Okay, fantastic play. And now I'm calling it a day. Thank you for watching. Hope to see you guys with us in our team. We crush it more often than not. This was an excellent BCA trade. Very happy to see it. We're going to do it again. Take care.